Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.exchange. And today, what a short covering rally. SGX Nifty indicated almost flat opening, just maybe 10-20 point plus, but we opened significantly higher, and from the start it was very firm. There was no intraday selling at all. There were many surprising things. The first thing is that Reliance Industries. I think I told you in the morning, there is some news about Reliance Jio Financial Services demerger. So Reliance can be in focus. It shot up 4%, and Reliance is the most index heavyweight stock. A 4% rally in Reliance Industries can add about more than 100 point in Nifty. And today, more than 50% of the rally has come from three stocks: Reliance Industries, Infosys and ICICI Bank, and all three from different sectors. These three stocks alone contributed for more than 50% of the Nifty rally. That's a second surprise. And global markets have been very good for the last few days, and I told you as of yesterday, European markets were consecutively higher for 4 straight days, and today also Eurozone inflation came much better than expected and they are higher. So for 5th straight day, European markets are higher. And for a long time, we cannot be underperforming global markets, and we had our own problems. Mainly two things. One is this Adani saga. The second one is this FII selling. But for the last 1 or 2 days, there was some buying by FIIs. FIIs did not sell. And today also, FIIs were net buyers for about 350 crore. But FII buying 350 crore and Nifty can shoot 350 point. And Bank Nifty shot up 300 points in the last 30 minutes on Wednesday, and today added another 600 to 700 points. A 1000 point rally from 3 p.m. on Wednesday to today. And I think Nifty has shot up nearly 400 points. Now, the major question comes, is this a trend reversal, or is it a window dressing? Because today is the 31st of December, March, and net asset value will be calculated to show the yearly performance of the mutual funds. So probably that could be one reason why DAS would have gone aggressively in buying the stocks, and especially the index heavyweights. And today, no wonder domestic institutions have bought for about 2,500 crores. That's a huge buying. So today the markets went up. The people are not interested in selling, so lack of selling. And so we don't know whether this is a short covering rally or a trend reversal. So we need to wait for 1 or 2 more days to confirm this. But one good thing is that from the recent low of about 16,828, so we have shot up nearly 500 points. So that's a significant. And not only that, for the last few weeks, Nifty has been trading between 16,750 on the downside and 17,250 on the higher side. And I've been telling you many times, so 17,255 on the spot is a resistance. Once that resistance is crossed, so it moved like anything. So now, worst seems to be over for our markets, and unless some other issue crops up, but as of now, there are no bad news. And globally, everything is looking very good. I've been telling you the 4th monthly red candle this month from March 1 to March 31. This 1 month candle is just how much negative? Is less than 1 point negative. Just imagine for trading for one whole month and Nifty coming and closing exactly at the same point. Half a point or 3/4 point minus. So that's why the candle is showing red. We call this as a Doji candle, and Doji candle shows indecisiveness. On the contrary, we can say the markets will be moving significantly higher from here or significantly lower from here on a monthly time frame. So on a monthly time frame, for 3 consecutive months we were down. The 4th month is absolutely flat. The probability of market going higher is higher than the probability of market going lower by looking at the global cues and other things. The only major concern is the FII selling, and I think that seems to have subsided now, and who knows. The past history shows as and when 3 or 4 months Nifty fell, the following month there was a significant move. Anyway, so I am expecting maybe around 17,800 to 18,000 as the target for the next rally. So I am not selling any call options below 18,000. So I am selling call option 18,100, 18,200 like that. Of course, put option, close the eyes and sold put option 16,800, 700, 600, 500 like that. So now somehow I feel that 16,800 will be a very, very strong support going forward. So those things we will see later. So the question is this a trend reversal or window dressing by mutual funds? So as I told you, we have to wait for 1 or 2 more days to find out. And as of now, everything is looking good. Looking at the open interest, once again 17,000 put option. In fact, for the last many months, 17,000 put option had the highest open interest, but once in few months, that highest open interest will be broken. So that's what happened in the month of March. The highest open interest was broken on the downside and moved another 200 point, but now it has come back. So for April series, and people are selling 17,000 put option in huge quantities. So which means that option sellers are now convinced that 17,000 itself will be a good support. But however, I always take more conservative view. So I sold put options 16,800 and below only. Hope this time Nifty does not break 17,000. So we have underperformed the world market hugely. Hope we catch up with the global markets. So in the past also many times it happened that our markets underperform the world markets, but after some time, they uniformly catch up with the world markets. But if the world markets come into trouble, that's a different story. So right now everything is looking good globally also, and everything looking good locally also. Anyway, my monthly view and other things we will discuss in Dalal Street Week Ahead program on Sunday. Hope you enjoyed watching this video. Thank you for watching.